Good morning. It's Tuesday, 2nd July 2024. My name is Vijay. Here is the pre market commentary based on what happened yesterday and what is likely to happen today. Now, yesterday was a fantastic day for investors across the board. If you look at the indices, CNX 500 made an all time high, mid cap, small cap, micro cap, and many scripts made an all time high on extraordinary volumes in those kind of scripts. Now, for old daddies like us, we begin to wonder whether risk is now at heightened levels in the market. Now, we can only do what we call risk mitigation or risk management by putting what is called as trailing stop loss. Most people forget that in a bull market, that markets can also come down and they can come down violently. While we are net long and we have a positive view of the markets, at least till the budget, but then you never know when risk will be hitting us and from where it will be hitting us. So, how do we manage this risk? First is what the price risk. The price risk would be just if you are long in the market for a very short term trader, you could put yesterday's stop loss or the past week's low as the stop loss, either in Nifty, Bank Nifty, or even in the stocks. Now, if you are a medium term trader or a swing trader, then you would like to put the previous week's lows as the stop loss. That is, it should close below the low of that particular number. Then, if you're quite worried and you think that you have made enough money and you want to get out of the market or reduce your position substantially, then you should look for the week after the week of June 4th, when the market fell and rebounded. And those are the numbers. If they close below that, then you should be concerned. Now, I will talk about Nifty here. Nifty, for instance, my very short term trading stop loss would be 23,950. Yesterday, we are at 24,140. So, about 100 points away from yesterday's close. It should close below 23,950. And for a swing trader, I would like to look at a close below 23,350 before I get alarmed. And if I'm a long term guy, then I would like to look at 23,200. A close below that will make me very concerned about the health of the bull market. Now, for the Bank Nifty, it comes to 51,750 on a closing basis. Yesterday, it has closed at 52,575. So, about 750 points below yesterday's close for us to get worried about them in the very short term. And for a swing trader, it would be 51,100, which is about 1,500 points below yesterday's close. And if you're a long-term bull on Bank Nifty, 49,500 and below, I would be worried if I was. I'm not a SEBI registered advisor. These are based on my analysis, based on purely price. Now, why are we suddenly talking of risk when I'm telling you that I'm positively biased? Now, there are different kinds of risks. One is the political risk. Political risk vanished last week when Naidu, Nitish Kumar, and Jagan decided to support the government unconditionally. So, political risk will not be an important component when we are doing risk management. Then you have the global environment. Global environment, as far as the stocks are concerned, as far as equity markets are concerned, they are all okay as of now. Yesterday, Dow Jones did well, Nasdaq did well, and S&P did well. Of course, the highs were hit on Friday, so they have not gone to those highs yet on a closing basis. But the Friday, it is better than Friday, but it has not crossed the Friday intraday highs across the three indices. Actually, Dow Jones has made a high quite some time ago, above 40,000. So that is one thing which we need to monitor. Then you have the corporate risks. Corporate risks are where the results start coming in, which should start coming in from now onwards, this week onwards, and you have to look at the results and then take a call as to whether you should be getting into those stocks. That is the corporate risk. Then you have the regulatory risk. Regulatory risk is where, SEBI, RBI, Government of India are going to change the rules of the game. If you look at it yesterday, SEBI has tweaked the rules of the game. May not be directly affecting the market, but it affects the brokers where they have slashed the amount of money which they could be shared with the exchanges. So that will shake a little bit on the regulatory part of it for the brokers, which in turn may affect the kind of volumes, because the brokers may tighten and also they may put in a little higher brokerage. So that will deter a lot of people who are doing huge amount of trading, because they have what is called the zero brokerage. So those zero brokerage may not be there for in the near future. So that is the regulatory risk. So political is gone. The global environment is benign at this point of time as far as equities are concerned. The corporate risks we will know beginning this week, and the regulatory risk has already started. Now, if you look at outside equity, then you'll have to get a little concerned with the rise of oil, which is going up steadily. What I would call a stealth bull market. Yesterday's closing or today's trading is a 2-month high of oil. Brent oil is now trading at around $87, close to $87, which is a 2-month high. While the hedges like gold and silver have not done much, but the DXY, the dollar index, is going up to close to 106, which it has not seen for quite some time. Now, it is probably because the Japanese yen, which was supposed to be defended at 159, 160, the Bank of Japan, for reasons best known to them, have allowed it to float lower. Currently, Japanese yen is about 161 and odd to the dollar. But as we go into trade today, we are looking at a bright trade, because the GIFT Nifty is talking of a gap up, but I don't trust it so much. But nevertheless, there's nothing to believe that the market will open with a gap down immediately. And if it has to come down, it may come down during the course of the day. So that is probably people are going with a positive frame of mind. Now, as far as the price risk is concerned, I am seeing RSI, Relative Strength Index, which I follow, is very high in many scripts, 85, 80, 86, 87. That is the kind of numbers we are looking at. Now, RSI by itself will not tell us that we have to sell off, but what it will give us, it's like an amber light. It is going to tell us that one has to be cautious in those scripts where the RSI is in the 80s. So that is one thing which we need to look at. So what I am saying right now is, while we have to be bullish because the trend is bullish, but we also need to put some signposts saying that these are the places where I will review my portfolio and then take action accordingly if I feel uncomfortable. Otherwise, till then, there should be no problem. But keep an eye that risk management is very key to protect your profits in a bull market. So whatever you do today, I hope it is successful, and you do it with equanimity, and just not get panicky or not get euphoric. This is Vijay here, signing off. Thank you for joining me.